Now, one thing that is actually something that people don't really get when they speak about AI is that today AI is different than what it was 6 years ago. So I think that the first thing that will change is the agentic layer on top of those solutions. And it also creates a mindset of filling up a checkbox that does not allow them to see the whole picture of the case.
3, 2, 1, yeah!
Welcome to Let's Talk Payments, the podcast where we interview experts from the online payment industry. My name is David from eFlow. We help merchants finding reliable and sustainable payment solutions. And today we have Noam Izhakhi from Ballerin with us. Thanks, Noam, for being here today. Can you tell us a little bit what you've done so far, what Ballerin does? What have you done?
Yeah, David, thanks for having me. It's great to be here.
You're welcome.
And I grew up in Israel. I started my career as a programmer, as a builder. I was always passionate about the people who are using the products and how not just to build it, but kind of like how to position it, how to bring it to the actual users. And very quickly, I found myself in the world of product management. I joined the space, if you'd like, the financial services space in 2016. I was very early employee in a digital banking startup in the remittance space. This is also where I met my co-founders today, and many of the experiences there actually design what we are doing right now. Because that was the first time which I came across the complexity of KYC, KYB, fraud, risk. The company was acquired by another company called Remitly. I spent few years at Wix. Wix is a website building platform that also became a payment company eventually. And then me and my co-founders started Ballerin. What we are doing today is helping financial institutions to embed AI agents into their onboarding, underwriting, and monitoring processes to comply with KYC, KYB regulations, card scheme compliance. We are MMSP certified solution of MasterCard Merchant Monitoring Program. And really, what the idea is to help other clients to do what the best humans can do and to free up, allowing them to scale, to make smarter decisions, and to free up the humans to focus on things that humans should be focusing on, which is thinking and decisioning and basically go away from the old model of checkbox compliance.
So this is why you are the best expert to discuss today's topic, which is the failures of KYC, know your customer, and KYB, know your business. What is the intent of mandating KYC and KYB to companies? What does it aim for?
Yeah, so the aim of KYC, KYB is to ensure that when it comes allowing people, companies to access sensitive services, the providers of the service have a basic understanding of who they serve, right? And that they are who they say they are, right? And what is the intent?
Why is that important?
And that's important. So there are all the jargons that we all know, right? Like sanction screening, politically exposed persons, and others. And the idea is, first of all, to understand that you are speaking with the person you think you are speaking with, and nobody kind of like try to enter the ecosystem through a hidden identity. That's the first step. And the second step is to understand that the person you're talking to is not involved with things that are that shouldn't get access to the service that you provide.
Yeah.
And there are a bunch of different solutions that solve those very specific different aspects of KYC, KYB, which is kind of like one broader term to today practically many different point solutions that we all know.
Yeah.
But what it serves is the understanding of women speaking with, is it really who they say they are? And the better understanding of their intent and the risk of serving or providing the service to that individual.
Yeah. I might be wrong, but I consider KYC and KYB often as a very static minded procedure almost. Am I right in saying that might still fit static businesses, but is not applicable anymore or not effective anymore when it comes to businesses of nowadays, which change super frequently or fast?
Yeah, I think you are very much right. I think that KYC, KYB is already kind of like a standard that the fraudsters, that everybody know.
Yeah.
So in a way, doing KYC, KYB, and it's doing a checklist of procedures that allow you to have the evidence that you need in order to demonstrate to regulatory bodies or other partners that you engage with that you did your best.
Yeah.
But people, because the focus on the evidence, people are basically doing it as a checkbox. And when you do things as a checkbox, you often miss the narrative.
Yeah.
Right? What is around it. And also, even us, right, as humans, right? Think about you when you do something repeatedly in order to satisfy a very specific kind of like checklist or evidences, that's very much limit your creativity.
Yeah.
Right? The curious state of mind, while asking, while kind of like seeing the whole picture. Sometimes those different components are even, being held by different people, by different positions. So you have, onboarding manager, underwriters, you have risk, you have fraud, and it's very hard to see the whole picture.
They all do their own checks.
They all do their own check.
Yeah.
And on the other side, we have the fraudsters that are also doing their own check, right? So they also have a checklist, which is very much standards, right? It's coming from regulation. So they are very much trained to understand how KYC, KYB processes work. And their goal is to fill up your checklist.
Yeah.
In order to enter the payment ecosystem. And that mindset created the problem and created also an industry of many humans that's what they do in order to satisfy those evidences. But at the same time, we're missing the living risk profile, the narrative, the real risk, in a way, some would say, that's hidden behind the entity or identity that you onboard or serve as a financial institution.
Are you saying that that KYC and KYB is more effective to provide evidence afterwards rather than actually preventing fraud or any kind of crime?
Yes. I think that the intent of KYC, KYB, as we mentioned, justified, and I totally get where it comes from. We're all understanding it, and I don't think I don't think it's something that shouldn't be done.
No.
I just believe it created a problem when there are operation teams that focusing and investing resources on filling up those checklists, while people kind of like quite often ignoring or not have the right mindset to pick up the actual risk.
Yeah.
Of onboarding this client organization.
Do you have a view whether that is recognized by regulators?
I think it does. I think that the obviously regulators or regulations are not moving at the same pace as the industry.
Yeah.
And
as the fraudsters.
And as the fraudsters, of course. They will always be the fastest, right? And so, yes, I think that the industry acknowledged the problem it's created, but they didn't necessarily bring solutions that allow the industry to do things otherwise. So I think we all agree that we need to check, if a person that we are working with is not in any sanctions or AFAC, we need to know those things, right? It should be done. The thing is that humans are doing those things today. It's prone to errors. And it's also create a mindset of filling up a checkbox that does not allow them to see the whole picture of the case, because you have, it's very, very fragmented, and it's very, very tactical, and quite often creates a tendency to look at the checklist rather than the risks. So I don't think there is someone to blame, right? But I think that all the industry understand that things are not being done in a way that is optimized. I think that regulators will evolve with time, and we already see that also the card schemes changing their perspectives regarding what is being expected from acquirers and PSPs to do when they onboard a new client. And things become, more and more, let's say, strengthens, like things become more and more required, more and more checks by us players in the industry in order to comply with card schemes. And that because people understand that the problems won't be solved by traditional KYC, KYB.
You mentioned that card acquirers or card schemes are getting stricter or expect more from acquirers. Do you have examples of that?
Yes. So just this month, there were a new update of the rules of MasterCard MMSP program, which Ballerin is one of the certified vendor in that program. And from now on, before an acquirer onboard a merchant, they must check first of all the merchant with a certified vendor. And what it means, it basically a little bit match like experience that you have to check before you process. And if you process without checking the merchant before the first transaction, it means that you won't be able to enjoy the MMSP benefit that provide you with up to 75% discount on the fine in case of violation. So it means that now acquirers need to do it in real time. Or to wait
to let the merchant wait. Yeah,
exactly, to let the merchant wait. And many of the solutions in the industry are not ready for that. We happen to be a real-time solution because we use AI, but many solutions are still manual. And that creates a challenge also to those legacy vendors to keep up the pace. So in a way, this is the card scheme are not a regulator, but in some sense they are owning the network and they have programs. And in that sense, a new so-called regulation created innovation. Right. So that's, that happened. That's one angle to look at it. Another angle is that the regulators are also humans, and they are humans in this world, and they use GPT and they use tools, and they starting to think, okay, how we can apply those tools in our work, in the way we enforce policies, in the way we operate. And so people are hungry to innovation. And we get inbounds from organizations that are very old school asking us questions how we can do things better in terms of like, leveraging AI. And that's an openness that haven't been there before. I feel like it's that those initiatives coming from legacy financial institutions to embed AI tools.
Yeah.
So I think we are in a very exciting times because there is a perspective switch regarding to what is possible. And people that were very cynical, starting they use AI all the time, and they think, okay, as humans, how we can also do those things in our work, how we can do better, how we can, in our case, make the industry better. So
even though they're not forced by regulators to do so.
yes, but I'm saying even the regulators are humans,
Yeah.
that use AI,
Yeah.
and understand and use it in their work,
Yeah.
in their day-to-day task, and see the ability of AI to understand patterns, to reason in a way that give them clarity that they didn't experience before. And so now they are hungry.
Yeah.
They are hungry to innovation. And I think that will, many new tools when it comes also to taxes enforcement, right? And other industries that are data heavy and which are very hard to understand the narrative, at scale, just by looking at certain data points. And we will see much and more for kind of like legacy organizations, regulators, law enforcement using those technologies, which will create innovation by vendors, by financial institution, and increase the standard of the overall industry.
Am I right in saying that either until recently, either still the expectation was to look at the identity of a merchant or the people behind the merchant, and that will or has already changed to a perspective of the behavior of the merchant? It doesn't really matter who they are. It might matter as well, but it matters even more what they actually do. Is that part of the merchant check you referred to, expected by card schemes? Not only checking who the merchant is, but also what they actually do?
Looking at the history and how, if we want to apply it to the use case that you have mentioned, right, in merchant acquiring, so, let's go a little bit back to how the beginning of e-commerce, right? Acquirers started to onboard e-commerce merchants, and obviously they didn't have really the tools to, automatically check the website, but they were checking, what they're doing in the MCC. But then the risk drifted, right? And it started, they changed the line of business. And at some point that created issues, right? For the issuers, for the card schemes, and the card scheme, and their program started to apply fines in order to ensure that the ecosystem is safe. And then they came to the banks, and the banks were like, MasterCard, Visa, I'm a bank. I'm not a technology company.
Yeah.
I go to the website, I assign an MCC, but that's it, right? And then that's how the MMSP program started, right? So MasterCard came up with the initiative of let's incentivize the industry to use vendors that have the technology to check those things, not just during onboarding, but in the ongoing monitoring, in order to keep the ecosystem safe. And if acquirer will have the ability to demonstrate that they use a vendor continuously and throughout the period, they will get up to 75% discount on the fine. So since then, the standard went up at that moment. And even the standard of the vendors went up. So it started by looking at the website, and then people started to look at with data and all those things that today we look at them as well as the legacy checklist that people are doing. Right? But that was actually an amazing innovation. People thinking, okay, how we can do things better, how we can be creative, how we can check things to understand the real risk of that business. And so as you see, it's kind of like a pattern, right? The industry starts with something very, very foundational. You need to know yourself. And then there are solutions to check the ID into automatic. And then those solutions also become a checklist, right? And then there is web presence analysis, and then it's also become a checklist. So, and that's exactly the problem when you face a reality that you have two sides, which one is the fraudsters that need to check those boxes, right, systematically, and one is the financial institution that need to check those things in order to show the evidences to their partners and to regulators. And that's exactly the opportunity that AI is opening right now. Because AI can allow you to understand the full narrative of the business. And it just needs to find a few things that doesn't make sense, right? The type of products and the prices, that everything is copied, the infrastructure is copied from another website, that, the UBOs have too many businesses from different line of businesses that increases their, including like the virtual mailbox and the shelf company. And you can look at the picture holistically and first of all, free up people from filling up checkboxes, right? Which is it's a horrible work, right? Nobody likes doing it. So that's, one aspect, right? Automation. But the second aspect is seeing the narrative of the businesses, of the individuals all together, being able to adjust to different line of businesses, different situations, but also to create a living risk profile that can be updated continuously all the time according to the transactions, to the entity, UBOs from the US that moved to Cyprus for some reason, new products and line of businesses on the website, complaints from different kinds, regulatory warnings, and all those things that you need to check continuously, but it just doesn't make sense to do it with humans.
No.
The unit economic of onboarding a business or a merchant doesn't make sense to put so many efforts. We're already drawing it work just by checking documents, KYC documents and IDs, and invest so much money in this operation.
Yeah. For me, it seems like the industry for a long time wanted to continuously monitor merchants, but simply didn't have the capacity or the ability to do that.
Of course.
And AI is the big game changer here.
Exactly. It's not that the industry didn't want to do continuous monitoring.
Yeah.
We all get it, that you need to do continuous monitoring to understand the risk of the business, but the unit economic managing the business doesn't allow it with humans that need to do those things manually, and that's what AI today allows us to do with automation, but also with intelligence that allow you to see the full narrative, right? Because when you create fragmented systems, you will look at the transactions, I will look at the documents.
Yeah.
The fraudster understand very, very quickly your perspective and my perspective, and understand how to satisfy you separately and me separately, but satisfy you throughout all the different systems.
Yeah.
The documents, the web presence, what people are saying, social media, the transaction, that become very, very difficult.
Exactly. Yeah.
And today AI can do those things and is doing those things.
Yeah.
So I'm very excited to be part of that industry.
Yeah.
Sure.
Yeah. When you look at a typical merchant from an old perspective, the static KYC, KYB, what kind of signals are usually missed when it comes to a merchant which might seem low risk, but actually is a high risk or even illegal merchant?
So the first thing is the smell test, right? So obviously, David, you're a very experienced risk professional. When you look at a business, you can immediately catch, you catch the signs, you see the buying experience, you see that the photos, were taken from somewhere else or not consistent. You see the prices that are too generic, right? And then you start also looking online and then you see, okay, do they have like real address? Does the address make sense, right? How people are speaking about those business. Do I believe to those reviews? Does they seems, credible, or they were all created in like 2 days, and
With tick the box.
to tick the box.
Yeah.
Exactly. So those are the things that people are missing, right? It's the overall picture, and people don't have time also, right? We have clients that onboard dozens of thousands, hundreds of thousands of merchants. They can't really afford themselves to go and do what our agents are doing, which is basically going online, read every article, every lawsuit, anything that is mentioning the business, the UBOs, the website, and start to understand whether it all makes sense together, right? It's just too much time. It's too much work. So, yeah.
Yeah. I used to have an advisor who told me if it smells like a fish and it looks like a fish, it probably is a fish. Yeah. And that's what you mean, right?
For sure.
Yeah.
And I think that I meet many people that are super smart, and they are managing risk teams or compliance teams, and they know all the tricks. They know everything, but they can't be everywhere.
No.
And usually you will have new team members. Some of them hasn't been in any kind of like industry, any vertical, so many fraud patterns. And those work are also, there is a big kind of like replacement, right, around those type of positions. So it means that you quite often find yourself working with junior or mid-level teams that, are under pressured to complete a case in 15 minutes, right? So we cannot judge the fact that they are focusing on completing the checkbox. This is how the system is designed. This is a cost unit for many of the businesses, and it's kind of like miss the point, because those people are actually the gatekeepers of the industry. They decide what enter in, right? And it's so important, right? But the way we design it, does not really allow to do it effectively. And we just add more tools and more checklists, right? And we just create a bigger cost unit for the organization with those more tools and new things to fill up. And that's what I believe AI is going to allow.
Sure. It's interesting that you mention it, because my feeling, I work with many acquirers globally, and my feeling is that many acquirers still have the old way of doing their KYC. They indeed have big teams following tick boxes, and those teams do an amazing job. And like you mentioned, they probably don't have the time to spend more efforts in finding what's actually going on. So on the one hand, you mentioned that there is a lot of technological abilities to do a better job. On the other hand, I don't see large financial institutions adopting these measurements, and I sometimes fear that they don't do that because their concern is probably that by doing that they will not meet regulatory requirements. Do you think I'm right in that? Do you think what I mean is, do you think that the regulator blocks such large companies of moving to technology, and that might be the reason it doesn't go that fast?
So I think that the financial institutions don't like to be the first.
True.
But I think that the card schemes are already using it and using those technologies.
Yeah.
And the expectations from their parties is different, because at the end there will be an issues, and then they will say, yeah, but we did 1, 2, 3. And we're like, yeah, but that's what you do. this is how your control looks like. Why you are not doing 4, 5, 6? So use a system that does, and then they will feel like, oh, damn, we need to keep up, right? And also the commercial teams, like as an industry, things are moving faster. They want you want to see speed, right? So the only, or not the only, but the best solution to move fast without compromising on risk and compliance is actually using AI systems. Now, one thing that is actually something that people don't really get when they speak about AI is that today AI is different than what it was 6 years ago. So 6 years ago, when we said AI, most of the vendors were speaking about machine learning and statistics.
Yeah.
And quite often, those were like black box models, right? So if we take it to the industry of merchant compliance, right? So there are legacy vendors that are still, by this very day, they use the same technologies. And when there is, iPhone on iPhone cover with a cannabis picture as a product on a website, those algorithms start trying to understand, hey, is this like they're selling phones? Are they selling CBD products, accessories? What are the risks behind it? And at the end, it will just say an answer, and the answer will be a black box, right? Because it was based on training data and on math, right? But today, the way those AI agents work are actually like humans. They tell you everything they did. They tell you why they did. So the ability to get audit trail, high quality audit trails with this are actually much, much, better nowadays with AI.
Are you saying that the old AI way of doing was still a tick box thing, following the feedback from those legacy providers?
So no, I'm saying that it was based on heuristic, right? So you take an algorithm and you show them many photos of dogs and many photos of cats. And you show them enough photos of dogs and cats, and then you start asking the algorithm, hey, look at this picture. Is it a dog or a cat? Why? You can't say why. You just say it's a dog based on what I've learned.
Yeah.
But today, what the AI is doing for us, AI agents, they actually operate like humans and they can reason. They say everything.
Yeah.
They say why they did it. They say what they did exactly, what sources they relied on. So the ability to get high quality reasoning and evidence back behind the decision actually improved a lot with the latest, LLM technologies that we're all using. So that opened a totally new possibility for automation, specifically when it comes to regulated industries. Of course, we need to ensure what data we share and how data is being stored.
Mm-hmm.
And we need to ensure consistency. Most of our company, 50% goes on like new products, but 50% goes on just ensuring quality.
Yeah.
Right? And making sure that we have regression tests to understand what will happen in such like a sensitive use case, right? Like risk and compliance. But yeah, the ability of having reasoning, having the evidence back with AI agents actually just, got much, much better.
Yeah. I like to go one step back to financial institutions not yet adopting these possibilities. What I see is that many of them still apply the typical tick box principles we already discussed a couple of times. Probably not because they believe it's effective, or probably not because they want to check these boxes, but they feel the mandate to do that.
Mm-hmm.
Don't you think that a regulator or maybe a card scheme moving faster in mandating new technology would force such companies to be much more effective? In the end, also in their interest, but also in society's interest.
Mm-hmm. So I think that what is going to affect it is just the economics, right? After all, those companies are businesses.
Yeah.
And as we mentioned, they need to provide fast onboarding. Why? Because the competitor give.
Yeah.
So if you need to do fast onboarding, we can't wait to a human checking all those like 10 different checkboxes. And we have heard that there is this other large legacy financial institution that just used AI and they are much faster than us.
Yeah.
And then there is pressure on the people in the company, risk, compliance, people that are not being incentivized necessarily by innovating to innovate.
Yeah.
And that's just how things are working. And we are in touch with some of the largest acquirers in the US. And I'm telling you, they have bonuses allocated to teams that embed AI into their processes. And people are definitely looking into it, and we will see a big change in the industry. And I think that we have to start training our people also to think about in this kind of way, how can we embed those technologies in our day-to-day in order to do what we do better, faster. And I see it coming from management in some of the largest financial institutions worldwide.
Yeah. I sometimes speak to underwriting teams who tell me they won't accept a merchant because the provider they use for checking those merchants gives a bad scoring. Am I right in saying that some of those companies have trained their teams to defend their decisions, to cover themselves, if you like, rather than making the right decisions or thinking, if you see what I mean?
Yeah, of course. Because that's the thing, right? We built a system that is focused on evidence back.
Yeah.
And this system is under pressure to perform fast and to be efficient, right? So all those use cases, tin file merchants, marketplaces, sellers, and others, that kind of like a little bit strange, a little bit different, they need to have a very strong economical incentive for those people who are under so much pressure to complete each case in under 15 minutes and to meet certain SLAs, will sit and, sit back and look at everything together. Is it real, the risk,
Yeah.
right? So definitely, I see it all the time. And, unless there is the incentive to stop and looking at things objectively, they will just rely on the tools they have and to make sure they are covered.
Yeah. What if you would be on the side of let's say the acquirer, and you would be responsible for an underwriting team? What kind of checks would you immediately get rid of?
Mhm. Yeah. So I think that there are many vendors that people are using, which are quite not valuable. And I think that the industry trained to use those vendors in order to say they use those vendors. But they shouldn't. It actually creates more false positives, more issues. And I would definitely replace those vendors with automation. So that's kind of like one angle. It's not very specific check, but it's more about like the general
Approach.
approach. When it comes to specific checks, there are many things that will help you sometimes, but in most of the situations, they create noise.
Yeah.
Right? So I see many vendors that use, with data in a way that doesn't really make sense to detect certain ecosystems, which sometimes it might be right? But in all those alerts that were created, right, for this one time to work, and all those false positives and information that people need to look at and spend their time on, so I think it doesn't make sense. But I think that with AI today, AI can take messy data or output from vendors that is not great and see the whole picture, and then to understand how to leverage it when it's needed and when it's necessary.
And realizing that's a sensitive topic, but does that also mean that you believe that some underwriting teams are simply overstaffed?
100%. I think that we'll all have to acknowledge the fact that the world has changed. And it means that some positions are going to be totally changed and to be replaced with automation. It doesn't mean that you would not have underwriters, but it means that the underwriters you would have would need to be very skilled and to focus on tasks that require thinking, creativity, and decision making, and not about filling up the boxes.
Yeah.
And that creates an opportunity, right? And I think that everybody should ask themselves how I can be part of what's going on, and to play with the tools, to experiment the tools, right? To build stuff, to play with it, to be playful with the tools. Also, if it, you know, doesn't going to replace the vendor that you use for that, but it gives you a way of thinking about any problem that you come across that at the end will make you this person that is suited for the new world, and thinking about solutions and automation and focusing on the right things.
Yeah.
So if the team underwriting teams today are overstaffed, yes, I think so.
You explained current AI versus 6 years ago. You know much more about AI than I do. Help me understand. There used to be a basic approach. If, let's say, if the website is younger than 1 year ago, rejected. That's changed into the old way of AI. If I'm trained that this is a dog, it is a dog. How does it work nowadays? You explained that the current AI can basically function like a human and explain like a human why it came to a certain assessment.
Yeah.
That sounds very vague.
Mm-hmm.
Can you make it more concrete?
Mm-hmm. Sure. So I think we need to go backward a little bit and, maybe to define the terms about what do we mean in this conversation or in general when we speak about like AI, right, or automation. So let's look backward, right? And let's say you are going to a vending machine to buy Coca-Cola, to buy Coke, and you click a button, and then the vending machine run a workflow, and then you get your Coke. And how does it call? This is automation.
Yeah.
Right? There is a workflow, someone click, there is an input, there is an output. That's simple. Now, let's build an algorithm that, based on your face, decide if you want Coke or grape juice. And we will bring all the people that bought grape juice or Coke, and we create a training data set, and we will train an algorithm to understand whether you want grape juice or Coke. That's statistics, machine learning, right? That's kind of like the idea of machine learning.
Mm-hmm.
Let's give data to the algorithms, allow him to learn the data and to make decisions much better, faster than we can do as humans. Now, let's say that you can go to the vending machine and to speak with her about your story and to advise with her and, start speaking about what you like to food and based on that and what you're going to eat after. And it would be like an ongoing conversation that at the end, it will suggest you and compare for you, according to you, what is the best drink you can choose in the vending machine.
And if I would ask the vending machine afterwards, it would be able to tell me you wanted Coke because you told me that you...
I was basing my decisions
Exactly.
on those assumptions.
Yeah.
And that's what AI brings to the table. It brings us the ability as organizations to have, algorithms that can be trained like we train humans, but they can operate, they can understand where they need a human in the loop and to bring him in and to manage a conversation-like experience when it's necessary. And then to create all the evidence pack that you need to support the decision that was made. And now you can apply it to any use case that we are like working on automating, and it's crazy. Because now, merchant risk can take everything together. KYC, KYB, the transactions, what people are saying online, and allow organizations to customize things according to their policy. Now they want to work, and seeing the whole picture in one mindset that is much smarter and faster than most of the humans can do under pressure of 15 minutes per case. Right? So that's brilliant.
And you mentioned different angles, looking at the websites, looking online at the merchant's reputation, looking at transactions. In my experience, which might be wrong, but in my experience, there is either vendors who look at the profile of a merchant, be it on their own website, be it online, either they look at transactional data. Don't you think that the perfect way of automating underwriting or monitoring would be to combine those and potential other perspectives?
1%. So today what we have is a bunch of solutions that meet the second use case we've mentioned, right? The machine learning solutions. And they have lots of false positives in many cases. And we build logic around it. Sometimes if we are a company that have the resources to automate, we build the logic. But it's very, very difficult to build the logic on top of, solutions that doesn't really work that great and, without seeing the whole narrative of the business. And this intelligence layer, it's exactly what we focus on at Ballerin and also other companies that focus on agentic AI, is how we can see the big picture, how we can see what's actually going on, how we can allow clients also to automate their perspective on top of those solutions and, understanding when it's relevant or not relevant to use them and in what ways.
What is then, I think that might be related. What is the biggest lie a vendor would tell when it comes to their use of AI?
So I think that the biggest and most common lie is that we use AI. I think that many vendors actually, I don't know why, I never understand that, but they like say that things are automated when they are not. And after you go live, there is like different SLAs, and there, you kind of like see issues, you see inconsistent results, and you start to understand that there is a significant amount of people going into the, and in a way, that should be like, that's the problem with that industry. Is that we hire humans to things that AI can potentially do, and they are underperformed in terms of the quality and the speed. And that's why vendors will acknowledge that. I think that in a few years from now, everybody will sell it as a great advantage that they have humans in the loop that enter just where they are really needed. But those people is not an offshore team somewhere those are like really experts, and they enter exactly in the right time and will make the right decision for you. Right? So I think that that's the first thing, right? We use AI when they don't really use AI. They use some certain of automation and humans. I think that the second is about performance. What can be done, right? And the quality of the data that the client is going to get. But those things also, I think, come up very quickly, and that's why there are. We are also working with many vendors, and we built a whole mechanism of how we check a vendor, and because it's actually very difficult, right? Just to understand how a vendor is performing comparing to another vendor. it requires skill and, data-driven mindset and focus, attention. Most of the organizations don't have it in-house, and so, yeah.
Another lie might be that many vendors claim to continuously monitor merchants, while it's actually still a one-time check, once per month, once per week, maybe even once per day, but it's not continuous. But how close are we actually to real continuous monitoring?
It's all question of money, to be honest. So people can continuously checking things if they want to invest. The problem is that it increases the costs, and many of the organizations make the decision just to do what they have to do in order to comply with the standard in the industry. So I think it's more like a business question the organization take, whether to continuously checking things or not. And AI, to some extent, make it cheaper, so it allow you to increase the productivity without increasing a lot the cost. So we'll see more and more organizations doing more things just because now it makes sense. And also because they will have more issues, because the cost for fraud just went down dramatically, and they can iterate much quicker, those financial organizations, because their mindset is totally different, right? We are playing defense, but they can try and change things all the time, or very, very cheaply, and it's just a decision of one, two, or few people that they need to make together. For an acquirer to change their policy or the tool that they are using, that can be anywhere from months to a year sometimes. And they change the tools and the things they do very, very quickly. It's a asymmetric, unfair game. So
you explained how AI can make its assessments and explain how it came to the conclusions. Would AI also be able to make decisions without human intervention?
So AI already make decisions without human intervention. Many decisions, for sure.
In terms of approving merchants? In terms of
approving merchants, yeah.
Do you have examples of those?
They need to comply with certain checks, right? In order to create the evidence pack and making sure we check the different things. But we're already working with organizations that fully automated the merchant application process.
So clients of yours use you to approve the merchants without any human looking at the cases at all?
Any human, nothing. Of course, when it comes to high-risk merchants, so people tend to want human to actually look at the merchant and understand what they're doing, but also the definition for low and high risk might change with the technologies that you have in place in order to verify those merchants. And yes, today there are quite a few organizations that onboard merchants without a human in the loop, end to end.
And how do you prevent then the AI to change its own tolerance towards more and more high risk?
So I don't think this is a decision that should be done by AI.
But how does AI know that it should not make the decision by its own?
So those are about policies. Today, for example, when we work with clients, they can define exactly when they want, how they want the agent to operate.
Based on MCC, for example.
Based on MCC, for example, different signals, different complexities.
Yeah. But let me give you an example. If a human underwriter wouldn't be able to immediately see that a merchant is not a merchant selling t-shirts, but is a merchant doing something illegal. And based on the in-house policies, it determines that the AI is allowed to make the decision on this merchant. I probably simplify. Maybe initially the AI machine makes the assessment that something is off, can it happen that by time the tolerance of the AI logic shifts into a decision that this merchant is not a weird merchant and should be approved?
Mm-hmm. Yeah, so I think that in many cases, at the end, some things are strict when it comes to risk and compliance, and we want them set.
Yeah.
But many organizations today allow AI to take decisions that are based on probability,
Mhm.
right? And the AI can take into consideration, you know, let's say you didn't define a rule for whether they have physical branches, but the AI see that they have any physical branches that make sense for enough time, which basically reduce the risk of the business, or those certain aspects that weren't kind of like, well, exactly according to your policy.
Mhm.
And what you will see more and more is people also giving feedback loop to the AI in order to understand the AI for itself, depending on how to use it and what models you use and in what ways. But, you know, have lots of context about the world.
Mhm.
And you can actually fine tune this context with more data and to feed it in order to the AI will be able to adjust the way it operates according to the data you feed it with. So,
And what makes that different than the cat and the dog example, where you also feed the AI machine with logic that this is a cat and this is a dog?
very good question. There is an imagination in terms of fine tuning, in a way, can limit the AI also and block the creativity of the AI to some extent. But at the same time, you can still leave it with a lot of flexibility and still allow it to find things in a way and to use all the benefits that we mentioned before about kind of like getting more data from humans, understand where to put human in the loop and getting their feedback in a way that still serve the flexibility that agentic AI bring.
Yeah. Yeah. I was trying to open a bank account for my own holding company, which I set up a few years ago. And I was rejected in a couple of days. And I didn't do anything with that company. And I tried again with the same bank 3 months later. And in one day I was approved. That made me realize that the KYC and KYB processes of many institutions, on the one hand, might not be effective to catch fraudsters, but on the other hand, might lead to a lot of genuine businesses being missed out. What problem is actually bigger, according to you?
Great question. I think that both of the questions, of course, that the risk of making the wrong decision in terms of like accepting the wrong business is much higher than not accepting good business.
Yeah. In terms of consequence.
In terms of consequence, one is about the implications are about actual risks and the sustainability of the business, while in the other case, it's about potential and opportunity. But when we look at it from a perspective of a business and sustainable business that need to grow and need to compete, so I think they are both highly connected and correlated, and they have to be considered all together when people decide how they manage those processes.
Yeah. Yeah. How do you think that approaching KYB and KYC will change in this year or in the coming years?
So I think that the first thing that will change is the agentic layer on top of those solutions, right? So companies like Ballerin that also have enrichment of their own kind of like data that they create, and in our case, we specialize in OSINT analysis, right? But we also have many, many vendors for KYC, KYB that we sit on top on and allow our clients to embed their policies and train the AI agents to operate like the people, right? So we'll see more and more of those solutions, right? We kind of like the evolution change from manual work to many point solutions, to automation, first of all, to some extent, to many point solutions that use machine learning and help to do automation better. And now there is a layer that is not just orchestration, which was kind of like the big word of, let's say, the innovative solution of 2-3 years ago. What they were doing is orchestration. Now there is the layer of AI agents that can understand much bigger picture and navigate and be customized and changed according to those organizations and their policies. So we'll see a lot of those going on. We'll see the best organizations like playing with those technologies, trying to build things themselves. We'll see many organizations working with providers that bring the balance between speed, but also making sure the quality, the evidences, and everything working in a way that satisfies such an important use case, like risk and compliance. So we're going to see a lot of those.
And how close are we actually to the moment that large financial institutions will use AI, real AI, as their standard way of making such assessments?
Very close. Many, many organizations already have people that are hungry, just looking into those solutions, what can be automated, what can be done better. And people, the individual, in a way, many individuals are themselves in a way under pressure to learn those technologies in order to stay relevant.
Yeah.
So you have like the pressure from management saying we want to do things with AI. You have the people that incentivize, by their personal growth, right, as professionals to embed those solutions. And I can share with you that many of the largest acquirers right now in the world speaking with providers like Ballerin and thinking how and where they should embed AI into their processes. So it's just a matter of time, and we are very, very close.
Great. Let's say that you would manage a risk or underwriting team tomorrow, and you would have to speak to your C-level. What kind of assumptions they might make on KYB you would love to take away?
So I think that what the management teams quite often hear when they hear KYB, KYC, they hear costs, they hear operations, they hear things that are slowing down their businesses. And it's crazy. When I speak with underwriters, one thing that, surprised me the most is how much those people know about the clients, the merchants, and how they operate. Much more than the salespeople who speak with those businesses and merchants all day long.
Yeah.
And go with them to dinners and drinks. They really understand things in a way that, in perspective, that nobody else get in the business that is not from the risk and underwriting component of the company. So I think that people need to appreciate a lot the work that they put in, and in terms of like the benefit and of having experts looking at business, asking critical questions, and they should definitely encourage them to automate. It's very important, in my opinion, that will be KPIs for automation in 2026 in any underwriting, compliance, risk teams. And of course, to have people that are strong enough to do it responsibly and to collaborate with expert teams that can help them to make sure they do it responsibly. So I definitely think that the management team need to appreciate a lot those people on the trenches that make those decisions for them and really care. I see so many people that they do this every day, every hour, and they still care so much, right? And that's amazing.
Yeah.
I think that the management team should put KPIs and to treat underwriting teams like they, in that sense, a bit similar to how they treat a product team, but also to remember the responsibility and the perspective, and that those people have to own the safety net of our business.
Yeah.
Have to keep our businesses safe. So they need to have a different mindset. They need to think differently than us, but it doesn't mean that we can't create the right system that allow us to balance this perspective with the business side and to build better businesses, right? Which this is what we all want.
Yeah.
Them. And I think that what underwriters team need to understand too is that sometimes AI can explain the story of the businesses much better than them, so they can actually spend less time explaining themselves to sales teams if they have solutions that are self-explanatory and are working according to the policy of the company. So there is another opportunity, which I think is very cool, is that when it comes to mitigating the gaps between commercial teams, underwriting, and compliance teams, traditionally the solutions didn't work according to our policy, right? They were just like checkboxes, and then the policy was embedded by the underwriter. It means that the underwriter now, if they say, let's say no to new business, need to explain themselves to sales, to the commercial teams. But today, AI agents can actually embed the organizational policy even in the very, very first interaction of a salesperson with the merchant, right? To help the salesperson to understand yes, no, why, as well as yes, but we need those documents, yes, but we need those reserved, etc.
Yeah.
Which can create huge unlock of productivity for the underwriting team, that they don't have to explain themselves and to engage in those conversations all the time. And they also get application that were already completed. So we actually launched a solution just for that purpose, to mitigate the issues and the friction that we saw between the sales and the underwriting, and allow the sales team to get very first go, no, go, why, and to make sure that when things getting to our users, they already completed and have everything they need to make the right decision for the organization. So I think there are many, many areas where AI can help us to communicate better, right? With management, between underwriting risk team and the commercial team, and embed our policies in a way that is consistent across those different components.
I found it very interesting today, Noam. I think you are doing great things for the industry, and I wish you and your company all the best. And thanks for being with us. If you are listening or watching, feel free to reach out to Noam on Ballerin.com or look us up at eflow.com. Until next time.